George Thurie's Mortgage Broker, and this is the July 2023 edition. So there's a lot going on in the market at the moment. I like to keep things simple though. Property can be surmised by simply supply and demand. This is both on the real estate sales side or on the rental side. So on the real estate sales side, we've got immigration. I think there's something like 400,000 people coming to Australia over a 2-year period. So that's obviously pushing up demand. But on the same demand side, we've got interest rates, which are high at the moment, pushing down demand. People can't borrow as much as they could before. On the supply side, as we know, supply levels are quite low. There's not enough supply for all the demand. So that's pushing up prices a little bit. Also, when it comes to building new homes, as we see almost every day on the news, there's construction companies going broke, there's not as many homes being built. So overall, what does this mean? Nobody knows. There's too many variables at the moment, like just trying to connect all these and go, right, yeah, what's gonna happen with property prices? People are making guesses all the time, but if you've been watching property for any period of time and the news, you'll see that they're almost always wrong. Almost always their predictions of what happens is going to be wrong. All we can tell you is what's happening right now, and this is what's happening right now. So when it comes to real estate sales, listings have increased. They're actually a little bit abnormally high for July. The spring selling season, that's when listings normally, greatly increase rather. And right now we've seen an increase. Now who's selling? It's mostly investors that are selling. And it really makes sense because if you're like a little bit hurt by the interest rates, if you're an owner-occupier, what are you gonna do? You're gonna go out and rent when there's a rental crisis going on. You're gonna try and hold on as long as possible because that is, this is where you live. This is, you're holding on to your home. If you're an investor, and you're not making the returns you used to, say you can't change to interest only for whatever reason, and you've got these higher interest rates now, you might go, right, it's getting tougher in the family home with all these expenses. If we get rid of this investment property, stuff the negative gearing for a while, let's just get rid of it and we've got more money for the household just to get us through this period. So that's what's happening. It's mostly investors. When it comes to property arrears, there's not a whole lot happening still at the moment. Now, you might remember I said that there's been a lot more arrears for personal loans, credit cards, unsecured debt. Well, and that normally precedes home loans being in arrears by about 6 months, and that started happening, maybe 4 or 5 months ago. So maybe we're getting closer to it. Maybe people's savings are decreasing. Maybe people are maxed out on their credit cards and the next thing that they're going to default on is going to be their home loan. We're not sure, but at the moment, there's a long-term average of about 1% mortgage arrears, and we're in that territory right now. To put it in perspective, the GFC was 1.8%. That's how much mortgage arrears there was there. So you don't need a big percentage jump for it to turn from, being the long-term average and being a catastrophe. So it doesn't sound like much, 1%, but each decimal place actually increases the problems quite a lot. So, but at the moment, everything's fine there. There's not a whole lot. They're finding that most of the mortgage arrears are all in, say, the outer suburbs of the city, for example. And there's a reason for that. It's always the people who have the tightest budgets that are affected first. Okay, so next Tuesday we've got the RBA rate decision, which I'm sure you've all been holding out for. What do the experts say? I say experts because they're often wrong. They believe that there's an 80% chance that there's going to be an interest rate rise. So wait for that. I'll let you know what happens as soon as when I receive the information. You'll get an email out letting you guys know what happened there. Here's something really interesting that people hardly ever talk about. So say if inflation is 10% and your house has remained steady throughout all this time, it hasn't gone up, it hasn't gone down, you've actually lost 10% of your house value. People don't realize this, but when you go to the market, you sell your house, if inflation is 10%, what you can actually trade that dollar for in real terms your buying power has just decreased by 10%. So really, your house price has decreased by 10% as well. So that's the danger of inflation, and that's why everyone's trying to rein it in so much. However, on the flip side of things, because inflation means that the dollar's worth less, right? It also means your mortgage is worth less in real terms. So the banks hate inflation because it basically decreases the value of your mortgage. You remember, say 20 years ago, had $10 was worth a lot more than today. It's the same with your mortgage. If you're paying off your mortgage in 10 years' time, that dollar's not going to be worth as much. The bank gave you the money today in today's dollars. So, you imagine if inflation is 10%, how much the banks hate that. They're giving you money today and you're paying them 6% interest, and really the value of what they're getting paid back is actually, decreasing. They're actually losing money. So that's a very interesting insight, which I think is important for you to know, that take solace at least that your home loans are actually decreasing with all the inflationary movements. But obviously, overall, inflation's a bad thing. So to have too high anyway, they always want to keep an inflationary measure of about 3% per annum. That's what the RBA's target range is. Actually 2 to 3% is their target range. So that's what they want it to be. Anything greater than that, they've deemed to be bad. Anything less than that, they've deemed to be bad as well. So anyway, a little bit of information for you. Okay, so a bit of a mixed bag this month. There's a lot going on. No one's quite sure about how everything's going to fit together. I want to remind you, it's an opportune time that things are never as bad as what it seems. Even during bad economic times, you can remind yourself that this too shall pass. The same can be said about the boom times as well. When everyone's rushing out to buy property and fighting each other to buy shares, generally this too shall pass as well. There is, however, a meeting point where these expectations converge, and over the long term, Australian property has increased, and the same with the Australian share market. So you can feel comfortable knowing that over the long term, you're going to do just fine by being invested in these assets. What you have to do is just block out all of the noise, and this is what I always say in every single video: block out the noise, focus on your own situation, and just know that if you just do the fundamentals, the right things, that over time you're going to be sitting just fine. So that's how I like to leave it in this month's edition. Thank you.